Hey guys, how are you all? My name is Harshit Vedi friends and I welcome you back to my video. In this video friends, I am going to talk about time deposits and demand deposits. And when we will come to demand deposits friends, we are also going to understand two concepts, current account and saving account. So all of these four concepts are interlinked to each other that will be discussed by me in this video. Before starting with this video friends, I would like to tell you that the Hindi version of this video is already uploaded. If you want it, the link is given in the description box below. Also friends, if you want to follow me on Instagram, the link of that is also given below. You can also subscribe to me on YouTube friends. So basically what is time deposit? In a very simple language, just understand friends, time deposit is that money which you have deposited in a bank for a certain period of time, and before that certain period of time you cannot withdraw that money, and if you are going to withdraw that money before that lock-in period, you have to pay some penalty. For example, if you have deposited 1000 rupees say in a time deposit in a bank, and say you have deposited it for 1 year, so before 1 year technically you cannot withdraw this money from that particular bank, and if before this 1 year you are going to withdraw this amount, you have to pay some penalty for it. And this time deposit can be for 1 year, can be for 2 years, can be for 3 years, it can be for 10, 20, 30. It depends upon bank to bank and the agreement or contract between the depositor and the particular bank. So basically time deposits are locked in for some amount of time. Okay. Now obviously here the money is getting locked, so the liquidity is restricted. So obviously the rate of return to the particular depositor will be a bit high. The higher the lock-in period, the greater will be the rate of return to the depositor. We are going to understand time deposits from some examples. Some examples of time deposits are: one is fixed deposit, one is recurring deposit. There are many reinvestment deposits also, and there are many more deposits. See friends, there are thousands of time deposits nowadays. You cannot classify it specifically. Yeah, journalist classification I can tell, that I am going to tell here. For example, the most famous type of time deposit is fixed deposit. In fixed deposit, what you are doing friends, a lot of you would be doing FDs if you are working. In a bank, you are going to submit a certain amount of money for a certain amount of time. Say you are submitting 1000 rupees in State Bank of India for 1 year. You can submit it for one more year, but you can submit it for 2 years, 3 years, 5 years, 10 years, 15 years, whatever you want. But for example, you have submitted it for 1000 rupees for 1 year. So before 1 year, you cannot take it out. At this point of time in SBI, the fixed deposit rate of return is around 6.25% or 6.3%. Somewhere around this is the current rate of return on fixed deposit in SBI. If you are an employee of SBI, you are going to get 1% more interest. For example, if you are an SBI employee, the rate of return to you on your fixed deposit will be around 7.3%. Okay. So in time deposits for general public, fixed deposit in SBI is giving a return of 6.3% approximately. So if you are going to submit 1000 rupees for 1 year, so at the rate of 6.3%, what will be? It will be 63 rupees interest for a year. So at the end, your total investment will be worth 1063 rupees. Got my point? So at the end of the year, either you are going to go to the bank and say that please give me my fixed deposit, so 1063 rupees will be given to you, and of course you will be charged interest on the 63 rupees interest that you have earned. Okay. Now, if at the end of the year you don't go and claim this money, so what the bank will do, this bank will again invest your 1063 rupees in a fixed deposit at the rates prevalent at that time. Okay, suppose today you deposited 1000 rupees and just 1 year after you got 1063. So 1 year after, whatever be the rate prevalent at that time of fixed deposit, your 1063 will be deposited at that rate of interest in the fixed deposit if you are not claiming it back. So this is the concept of fixed deposit funds. And if you are taking your fixed deposits before a certain period of time, either you are going to pay some penalty or you are going to surrender your interest, some amount of your interest. What is recurring deposit? In recurring deposits, basically this is targeted to salaried personals. What is happening in recurring deposits at certain period of time, and that period of time in most of the cases is 1 month. So a salaried employee opens a recurring deposit, and every month he is going to put in some amount of that money in that recurring deposits, and whatever is the term of that recurring deposit, say around 24 months, you have made it for 24 months or 2 years. So in that case, your deposit principal and the interest accumulated will be paid to you at the end of 24 months or 2 years. This is basically recurring deposits. There are many reinvestment deposits. Now friends, The borderline between fixed deposit, recurring deposits and reinvestment deposits is very hazy nowadays. Many features of recurring deposits will be found in reinvestment deposits. Many features of reinvestment deposits will be found in fixed deposit. Okay, so thousands of deposit schemes are going on. For example, if in recurring deposits, every 3 months the interest is getting accumulated. So suppose you invested 1000 rupees at the rate of 12% per annum is the return, and you are getting interest at the rate of 3% compounded at every 3 months, so in that case, for 3 months the rate of interest will be 3%, because for 12 months it is 12%. So after 3 months the interest will be 1000 into 3%, 30 rupees. This 30 rupees will be added to it, it will become 1030. So after 3 months the principal amount will become 1030, and for the next 3 months the interest will be 1030 into 3%. That will going to be how much? It will going to be 30.9. So for next 3 months the interest will be 1060.9. So interest is getting added to the principal amount at the end of every 3 years, because the rate of interest is getting compounded every 3 months. So basically this is reinvestment deposits. So the borderline in all of these type of time deposits is very hazy. So in order to understand a proper time deposits in which you are investing, you need to read the term before investing. Okay, so these are time deposits. In this, the amount of money is locked in for some period. When the money is not locked in and the liquidity is high, then it becomes demand deposits. In demand deposits, what is happening, friends? Whatever amount of money that you are investing it, okay, in demand deposits, whatever amount of money that you are investing it, you can get it back at any point of time. For example, here you have to understand two things. One is saving account and one is current account. Suppose you have a saving account in SBI and you have 1 lakh rupees in your saving account. You have maintained 1 lakh rupees in your saving account. So what happens that SBI annually pays an interest of 3% on your saving bank account deposits. So at the rate of 3%, friends, on this 1 lakh rupees, you will be getting 3000 rupees a year. So basically, if you are maintaining a balance of 1 lakh in your saving accounts for 1 year, 3000 rupees will be paid to you by the State Bank of India. Whereas, as I've already told you, if you are going to deposit there 1 lakh rupees at the rate of 6.3% in the fixed deposit of FBI, you are going to get 6300 rupees. So if you are a normal person, or if you are an intelligent person, you will say that I will deposit my 1 lakh rupees at the rate of 6.3% in fixed deposit. But there is a problem in fixed deposit. Your money will get locked in for 1 year. Whereas in saving deposit, at any point of time you can withdraw your money. So the liquidity in saving account is very high. And that is why demand deposits become important, because in demand deposits, liquidity is high. At any point of time you can withdraw your money. You can withdraw your money by ATM. You can withdraw your money by going to the cash counter and asking the cashier, by filling in the cash form. You can withdraw it by check. You can also do electronic transfers to any other bank account. So by all of these methods, you can claim your demand deposits. Okay. In saving account, some amount of interest is paid by the bank to the depositor. Whereas in the case of current account, the things become too much different. In current account, in most of the cases, the bank doesn't pay any interest to the depositor, whereas the depositor is paying the bank some amount of money for maintaining the account. Because in current account, a lot of transactions are there. Very frequent transactions are there in current account. Whereas in saving accounts, there is some restrictions. On saving account, there can be a limited number of transactions. In saving account, friends, the daily withdrawal level is limited. There is not unlimited withdrawal limit in saving account. So there are many restrictions on saving account. Whereas in current account, there are no restrictions. Restrictions. A lot of transactions are happening in current account. Okay, and very frequent transactions are happening in current account. That is why in current account, in most of the cases, the person who is maintaining the current account, that is the depositor, he is paying interest to that particular bank. I will give you some example. Suppose there is a restaurant. In that restaurant, many people are coming every day and they are eating, and they are paying through their card. So digital payment is going on. So many people are coming to the restaurant, they are paying for the restaurant. So very frequent transactions are there in the account of that particular restaurant, and that restaurant would be having a current account. Similarly, the expenditure of a restaurant will be very high. The cost involved in maintaining the restaurants are also high, so the expenditure will also be high. So a lot of transactions would be there in that particular current account. So the purposes of a restaurant cannot be met through a saving account. There has to be a current account for this. Similarly, if there is a petrol pump, in petrol, every few minutes some vehicle is coming for filling the petrol. So in that case, digital payment is done, card swapping is there. So a lot of money is going to that particular current account of the owner of that petrol pump. So that has to be maintained in a current account. Saving account cannot fulfill the purpose. So basically in current account, a lot of transactions are there. The maintenance cost of current account is very high for the bank, and that is why bank is charging from the particular account holder. Okay. Now, if the bank is charging from a particular account holder, the bank is also giving a lot of facilities in the current account to the current account holders. For example, unlimited transactions. For example, overdraft facility. What is this overdraft facility? Overdraft facility says that if the balance in that particular current account is empty, then also some amount of money can be withdrawn even if the account is empty. So current account is having a lot of facilities, whereas in saving account you have to maintain a minimum amount of balance. There is a rule in saving account, you have to maintain a minimum amount of balance. In current account there is overdraft facility. Even if this complete balance is empty, some overdraft can be made. So these are the basic difference between saving account and current account. On current account, the consumers, the account holder is paying to the bank, and in saving accounts a very small amount of interest rate is paid by the bank to the depositor. So basically these CASA deposits, the CASA deposits maintained by the bank, they are actually very beneficial for the bank. Why they are beneficial? Because bank have to pay very less for maintaining them. For saving accounts, bank is paying very less amount of interest. For current accounts, the bank in return is getting interest. So banks focus more on getting CASA deposits. Why? Because of the total number of deposits that a bank is having. If the percentage of CASA deposits is higher, then bank will be in a comfortable position. Whereas for a bank in which the percentage of time deposits is higher, that bank will become uncomfortable. Because in time deposits, that particular bank has to pay a big amount of interest to the depositor. Whereas those banks which are having a higher amount of CASA deposits, they have to pay very less amount of interest. So banks are trying to enhance their CASA deposits, and that is why you will see that banks like Punjab National Bank, SBI and other banks are trying to open salary accounts. For example, if there is a college in Kanpur, so many banks will approach that college that the salaries of your employees will be will be credited in our account. We will give you salary accounts free of cost, zero balance salary accounts. So a lot of schemes are maintained by the bank for opening saving accounts. Similarly, for opening current account, point of sale machines are given by the bank to that particular account holder. The bank also tries to increase the chances of opening more and more current account, because that will give benefit to the bank, direct benefit to the bank. The account holder will be paying interest to the bank. So the banks try to enhance their CASA deposits because that will bring them in a more comfortable situation compared to the banks which are having a greater amount of time deposits. So I hope the concept of time deposits, friends, the concept of demand deposits, the concept of saving account, the concept of current account is clear to you in this video. So thank you for watching this video, friends. I hope this video is liked by you, friends. If you have some doubts, you can ask in the comment section below. You can also contact me on Instagram. You can like this video, friends. You can comment on this video. If you really liked it, you can subscribe to my channel only if you like it. So thank you for watching this video, friends. Have a great day and goodbye.